Everybody. Good to see everyone tonight. We're going to have a great time. Let me share my screen so we can get started. I'm so excited about this topic, but more than anything, I am so excited about the fact that we are educating our community. We are providing this free education for our community. I am really turned on about that. And, we've got to get the word out, let everyone know that this information is available. No one had to register. No one had to give up their what you call it, email address and phone number and none of that. All they had to do was show up. So you wanna let your people know, let everybody know that this information is there for them. It's free, and there are no tricks, there are no sales, no anything. Just show up and learn. All right. This is a great topic. I really enjoy this topic because for a very long time, I did not understand or know the stuff that I'm going to talk about today. I've been a licensed associate or licensed agent for over 25 years. I've been independent. And so I'm not tied to any one company or the other. I was able to make my choices as to who I wanted to listen to, who I wanted to represent, and who I wanted to talk about. And I chose to talk about the things that I wanted for my family. So all the programs that we're going to give you guys general information. We're not going to be mentioning any company's name. We want you to be able to use this information regardless of who you are and where you are and who you're talking to. All righty? So let's get started. All right. So how much life insurance do I need? How do I determine that? Let me go back right here. What kind and how much life insurance do I need? Now, that's a question that most people need to ask. And so let me go back one more time. I need to mention this. Sometimes truth and value gets lost in marketing. A lot of times the company's zeal to market, they will kind of overshadow the real truth or value of the thing that you're looking for. And we know that you have a great commercial, 15 seconds, and then 30 or 45 seconds of disclaimers, the side effects, and all the kind of stuff in very small print, said very quickly, put out by music, because they have to be held responsible for what they're doing, but their emphasis is on marketing, not necessarily truth and value. So hopefully we'll give you guys enough information, let our free community financial education forum bring some clarity and value to this very important subject of life insurance. All righty, here we go. So when did life insurance programs begin? And I want you guys to know that this stuff has been around for a long time. One of the first life insurance program was way back in 1583. I don't think my friend Ed was born back then, but almost. But way back in 1583 is when life insurance, one of the first recorded life insurance programs. So here in the US, one of the first life insurance companies was founded in 1759. So we've been doing this here for a long time also. All right. Now, the basic concept or definition of life insurance, and this is a concept or definition that I came up with just to make it easy for me to understand. Okay. Life insurance is a financial program. Back up. Insurance or life insurance. And I say that because I also have a commercial life insurance license. And so I understand commercial, I understand, commercial property, workers' comp, all that kind of stuff, and also life insurance. But the whole insurance concept is basically It's a financial program where many people pay a relatively small sum of money or premium that accumulates into a huge pool of money. Now, what this pool of money is available so that when a few people, because everyone doesn't suffer a catastrophic event at the same time, but this is set up so when a few people at a time have a need for a large sum of money, catastrophic event, the money will be available to them. So, you may pay 30 or 40 or 50 or $100 for 100 or 200 or $500,000 worth of life insurance. And now you suffer a catastrophic event. Your $100 or $50 a month now makes available $500,000 for your family in the event of your death. Now, there are other ways that we can benefit from the newer life insurance programs. And I say newer, but they're new to us. But some of these programs have been around since 1937. But anyway, that's the general concept. You get a lot of people paying a little bit of money to create this big pool of money so that when a few people out of that group needs a lot of money, the money is available for them. All right? Now, let's move right along. So let's talk about how to determine how much life insurance you need. All right. First, to determine that, you need to know a couple of things. First of all, number one, what or who is my life responsible for? And what am I trying to protect? You say, what or who? Well, you think about it. You sign a 30-year mortgage, you're responsible for that. You have a wife or you have children, you're responsible for them. You create a lifestyle, you're responsible for that, and you've got to protect that. So you've got to have that in mind, first of all. And then secondly, what's my potential income achievements? What can that be? If I'm making $100,000 a year, in 10 years, that's $1 million. We create a lifestyle based on the income that we are able to generate. And so, what are my current liabilities or commitments? I got 3 kids. Got to get them to 18 years of age. They need my money, right? I got them accustomed of living on $100,000 income or salary or $150,000. They're accustomed to us having transportation and clothes and all that stuff. And so I cannot let anything get in the way of my commitment to them, my commitment to my spouse, my commitment to the 30-year mortgage at the bank or the 5-year loan for the car or whatever the case is. That lifestyle, that thing that we create, that the thing that we work so hard to create for our family, protect it. So you identify that. So how do we do that? Well, most companies in this financial industry use what they call a financial needs analysis. And I'm going to bring this up again here a couple slides down the road. But a financial needs analysis, you got to determine what are your assets and what are your liabilities. You need to know, you need to organize your finances and understand what's going on with your budget, how much money I'm making, how much commitment do I have going out. And then when it comes to life insurance, they have a nice little chart that most companies use and little process that's called the DIME method. So you take the important things that can really change or that can really get out of hand and hurt the lifestyle, the family, everything. You look at debt, right? That's the first part of the dime. How much debt do I have? If I had to lay in bed for the next year or two, how much debt is coming looking for me? If I die before time, how much debt am I going to leave for my family? How much debt am I going to leave behind? Debt. Then income, right? How much, most financial companies will tell you want to protect at least 10 times your income. I believe your income needs to be protected based on your responsibility. You have a 2-year-old child, you need at least 16 years of income to make sure that they get to where they need to go, at least they're 18. You got a 30-year mortgage, you've only been paying on it for 5 years, your family lives in this house, this is the place of security. Well, you need a little bit more than just 10 years protection for your mortgage. So at least have enough funds to pay off your outstanding mortgage. So that is what you would put in that on that line. And then education, if you like for your kids to go to college and so on, determine what that is, put that on that line and protect it. And this is kind of how you determine how much life insurance you may need to take care of that lifestyle and to keep your promises to your family. All right. So let me move on a little bit further here. So let's look at the various types of life insurance programs. You know, there are basically two types of life insurance programs. Number one is your term life insurance. Term life is for a specified time frame. 1 year, 5 years, 10 years, 15, 20. They even got some that are 30 years. That's great. But, you know, it's for a specified time frame. So these programs provide protection at a lower cost, but it's temporary, right? So you have a 10-year term is going to cost less than if you had a 20-year term, and it's definitely going to cost way less than a permanent program. So your term life insurance programs provide protection at a lower cost temporarily. Want to keep that in mind. Then on top of that, we have what some people call cash value or permanent life insurance. Now, these programs are permanent programs with the purpose of protection and cash value accumulation, right? You want to have protection for, you know, for your income, for all that good stuff, but you also, you know, want to accumulate cash. And these programs would allow you to do that. There's no cash accumulation in the term programs, and that's why they are at a much lower cost than the permanent programs. But some of these programs you may recognize, I've heard of them, like a whole life policy and universal life or index universal life or variable universal life. You know, this is some of the permanent programs that are used to have protection and also cash accumulation. All right. So we talked about determining how much. We talked about determining the kind of insurance life insurance that you may need. So now let's go to how to determine how much life you need and what kind you could really be able to take. Now, remember the financial needs analysis? Well, that's going to let you know the available budget. Once you list all your liabilities and you list all your assets and you know what your budget is, now you know how much available funds you have to put towards life insurance or to put towards savings or both. But this is how you would determine how much funds I have available. And this is going to guide you into what programs you're going to use. Also, you got to look at what assets you're protecting, you know, the asset protection needs and or responsibilities. So one is going to determine how much, but the other one is going to determine, you know, which one I can get based on what's available. Remember, the term programs are protection, but they're lower costs, but there's no cash accumulation. The permanent products are protection also and savings, but that requires a more outlay of cash. So the various types of life insurance, like we talked about, basically two types, right? Temporary protection at a lower premium. Now you go back to your budget, see what the budget says. I may need to look at one of these, lower premium programs to get the protection I need. The cash value, permanent protection plus added savings. Not only do I have enough money in my budget to pay for protection, but I have money in my budget to save also. So I want a program that would not just provide protection, but I want one that would provide savings. And yes, based on my financial needs analysis and my budget and the available cash that I have, I believe I could use a permanent program would give me protection plus savings, because the higher premiums are not a problem. Well, sometimes by the time we get this information, our budget is like upside down, right? But our responsibilities are the same. So you may be earning $100,000 a year, and you had been spending as if you were earning $150,000. So now your available budget is $25, $50, no dollars, right? And so in a case like that, you still need protection. You still have a family. You still have a home. You still have responsibilities. But in a case like that, you barely have enough for protection, and we have to protect. You barely have enough for protection. And so the thing about that is you want to use a term program that gives you the protection that you need, gives you a year or 2 or 3 to get your finances together. Because once you start to understand these principles, then you realize, okay, hold on a minute. I got to get my budget under control. I looked at this financial needs analysis, and I need some restructuring. And that's what you do, right? And so this here will help you. Once you get an understanding of this, you know you need to protect, but you also need to save for the future, for retirement. And let me go over a few other things that will give you guys a better understanding of this. So when you look at the financial, we have a financial philosophy here at OIC 10K. We believe, number one, life insurance is not for funerals. It's just not for funerals. We've been told that all our lives. We've been told that in our community. And we've seen many people pay on life programs because they heard you want to have some life insurance so that if you die, they can bury you. And so they spend a whole lifetime planning on a funeral. I don't know why, but I think I can find a lot more to think about during my lifetime than a funeral. So we don't believe life insurance is for funeral, but we believe life insurance is for lifestyle protection. You created a lifestyle. You went to school, you studied, you got a degree, whatever you did, you started a business. Now you're earning money, and now you bought that car, you bought that home, you took that family, you had those kids, you created a lifestyle that you love and enjoy. If you love and enjoy it, should you protect it? So one of the best ways of protecting it is with life insurance. Number two, income replacement. Your income drives your lifestyle, right? And so the thing about it is, if we have a nice home or a nice lifestyle, the cars, whatever we have for the family, it's all produced by the income. What happens if I can no longer create or produce that income because of I'm not here, I died, or because of a chronic or critical illness or something like that? What happens to everything that I put together, that I created? What happens to my family? How do I keep my promises? How do they stay living in a comfortable home? How does this work? That's why you can protect that with your life insurance program, right? Income replacement. And then wealth transfer. This is one of the best way to transfer wealth, tax-free. A great deal of the wealth that is obtained in this country came from some type of life insurance program, for those that understand it, right? And for those that don't, well, we keep planning for funerals, but wealth transfer is a big one. And then legacy building. Legacy building, you can get a substantial life insurance program that would not only provide for your family, after you're gone, but it provide well enough for your family and leave some for the future generation. You would have created a legacy by obtaining the right type of program. But not only that, man, this is some of these programs are tremendous and can be used for creating a lifetime tax-free retirement income. You can get an income from your life insurance program, right? Now, the one that you get just for funerals, there's no income coming from that. But some of the other programs, permanent programs that could accumulate cash and that can grow money by earning good interest. And I looked at some of my programs just a couple of days ago, averaging 9 and 10 and 12% interest. You can create or generate a tremendous amount of cash that you can use for retirement. And when you use that for retirement, use it properly from a life insurance program, it is tax-free. So keeping that in mind, just let me mention a couple of quick things, okay? The life insurance is one of the wealth secrets that was not very common in our community. And we are so happy to bring this kind of information free to our community, allowing our community to get this information, to be able to align themselves with good financial principles and processes that we can really generate the type of legacies and the type of wealth that we would like to have for our family. So I've enjoyed sharing this information. Man, I'm so excited about this. There's a whole lot more that I could talk about this subject, but I just wanted to give you a concise, basic way of looking at life insurance and understanding how to determine what you need. So we want to thank you for allowing us to share this information with you in our community, and we look forward to seeing you again very, very soon. God bless and have a good evening. Back to you, Marlene.